It's time for Charting Futures. Here's Abigail Doolittle. And Abigail, well, September, it's staying pretty consistent with August, a battle between the bulls and the bears.
You're absolutely right about that, Caroline. Yesterday, the bears were in control. Today, the bulls. Let's put this into the context of August's range. Everybody's talking about the chop for the month of August, and take a look at that. Sideways, up, down, up, down, up, down. This tells you that there's a high degree of uncertainty out there around macro factors, the Fed, trade, other factors, geopolitical tensions, factors that can't be controlled by traders. So again, nobody really knows here, and the range itself is not all that important. It's how it's going to break. If to the upside, you're going to see new all-time highs. If to the downside, we could, in fact, go back toward last year's lows. So let's put this small range into the context of a massive range. This range goes all the way back to the beginning of 2018, and we see that the uncertainty that we've had more recently, it's been pervading markets now for quite some time. It really starts off when President Trump back in 2018 slapped tariffs on washing machines and solar panels. From there on out, we just have these huge moves up and down last year's huge volatility. That's true, too, for not just August, but this year. And this is a broadening formation. Typically, it's a bearish pattern. It represents wild uncertainty and excitement on the part of traders. They're really not sticking to their guns. They're buying and they're selling. But the fact that it's widening typically means that it goes to the bears. This area of congestion in August will, in fact, determine whether we go to the top of this range or to the bottom. This overall pattern is also a broadening formation. All of this suggests that we could see some bearish volatility ahead. But to really bring in an expert to talk about this range, the August range, stocks, Steve Suttmeier of Bank of America Merrill Lynch, thank you for joining us for Charting Futures. And what do you think about that chart? I mean, it's really pretty significant. And John Clovis joined us from Macro Risk Advisors a few weeks ago, and he was talking about it. He thinks it's going to be bearish over the next 3 to 6 months at least. He's not sure that the huge range will break to the downside, but that we could actually test last year's lows.
Well, I mean, when I look at that range, I see big support around 2,700. And I think as long as you hold 2,700 the back half of this year, the S&P is fine with similarities similar to what we had in late 2016 and late 2012 with the potential for new highs. So that's the way I'm looking at it.
Okay, so let's bring in the put call, because you're saying that it seems as though people are getting a little bit too bearish.
I think so. And I think this put call ratio, which is the highest since the lows of January, are telling us that investors are really worried about that chart pattern you pointed out. So when you see the put call ratio elevated, meaning too much put volume relative to call volume, investors are already bearish. And I'm going to take the contrarian. So that means I'm going to be bullish here, given that measure of sentiment.
So let's put that into the context of your futures chart here, the E-mini futures. And there's that range. It's really incredible. Look at how predictable these buyers and sellers have been in the month of August.
Well, what's really interesting about this range is, held by the low end of 2,800, the upper end around 2,945. Two things I'll point out. One, advanced decline line S&P went to a new high. New highs for the S&P typically follow that, so that's important. And the other factor is when you look at other markets like investment grade and high yield, those indices have gone to new highs. And just dovetailing off the put call ratio, short interest for equities in general has moved higher as well, arguably to the highest level since February 2016. So this tells me that this range, if these indicators work, should break to the upside. Investors are too pessimistic, and you're starting to see some improvement in the indicators.